Good afternoon, everybody. Uneducated Economist here. I thought I'd talk a little bit about the real estate market. I've been hearing a lot about how housing is coming back and how low inventory is keeping prices up and low interest rates is attractive for, home buyers. And that we have this mortgage application picking up. I think they said it was like up 6% or something. I can't exactly remember. Maybe I'll find the article on that one and put it in the links. But I do have some links down there in the description for you guys, like always. But I think about like all these positive signs for the housing market, jobs coming back and stuff like that, which is still questionable. But the problem with it is that prior to the housing downturn, prior to in February was like they were saying that this was going to be the best housing season yet, as far as prices and activity and whatever they're determining that is going to be the best, as far as recent time goes. But it all came to an end in March when we went to lockdown and nobody was selling their homes. The amount of inventory left on the homes, as far as for sale out there, has dropped dramatically, and the interest rates are coming down too. But the capabilities of the buyers back then was a whole lot bigger and easier to get a mortgage than it is now. So even though the inventory and the interest rates are dropping, which you'd think would be good for prices and new home buyers, the capabilities of the buyer out there has diminished quite dramatically as well. Because a lot of people who own homes, they kind of flip homes. Like every couple of years, and interest rates drop. For the payments that they're making now, they can get into a bigger, better house. And so they'll sell the one they're in, move into another house, and kind of upgrade their homes. Well, if you go into forbearance, you're not going to be able to get a new loan. There's a lot of forbearance rules, and I mean, they could probably change this at a moment's notice, and maybe some of the lenders already have. But if you're in forbearance, a lot of the lenders out there are saying that you have to wait 12 months before you can apply for a new home loan. And I was even reading an article that said that a gentleman had gone into forbearance, but he never missed a payment. And even though he had never missed a payment, or because he had never missed a payment, it gives him the ability to refinance his home. But if you had been in forbearance and had missed the payment, then you were not going to be able to refinance your home. So a lot of these people who flip their homes will not be able to do that. So it kind of takes them out of the buying pool. And now, student loans. I found an article where a student loan where a girl was in forbearance automatically, like they had automatic forbearance on these student loans. She had never missed a payment, proved that she had never missed a payment, and she was not able to get a mortgage for a home. So I got to thinking about that. It was just like, wow, if student loans, if you're in forbearance, takes you out from being a home buyer, and being in forbearance on your own home loan takes you out from being a buyer, that's a huge portion of the population that is no longer in the pool of buyers. Then, on top of it, the lenders are asking for a higher credit score during a time when everybody's lost their job. And they're spending their money, as far as needing to use credit in order to make the ends meet. Now, I know a lot of these guys right now are sitting in like extra funding from unemployment and the stimulus check and stuff like that. But at some point, all that ends, where the money runs out and the jobs are not increasing at a pace fast enough to cause an actual recovery to take place. We need to see a significant job growth for a long time. I mean, we lost all the jobs since 2010, since the great financial crisis. And the increase, well, the supposed, which we still don't know, but the supposed increase in jobs was just a minute amount compared to how many have been lost. Even if it was accurate, it's still like just a small amount. So, in the end, you got servicers who are also sitting in a terrible position because mortgage servicers are obligated contractually to pay those mortgages to the investor, the mortgage-backed security holders, essentially. And a lot of these things are backed by when you hear like backed by Fannie Mae and Freddie Mac, the government institutions. That's only if the servicers don't pay. And these servicers are essentially like private companies. And so they're paying these things on their own dime. Now they are meant to get reimbursed, and at some point they will once the homeowners start making the payments again, or have to refinance after the forbearance period is over to figure out where it is that they stand with their lenders. But what if those people foreclose? Then where are the servicers going to be at? They're going to be in a very tough situation considering that they just made a bunch of house payments for people who are not paying them. Then what are they going to do? So it's very interesting times coming up here with the housing market. Even though we're seeing the inventory drop and the prices or the interest rates drop, it's not going to be a good sign for selling homes here into the future. It's going to be very difficult. The pool of buyers is getting smaller by the day. I mean, how many people out there have a student loan? How many people have asked for forbearance? How many people thought by doing that they were going to end up screwing up their capabilities of buying another house or a new house or refinancing their loans? I think about like how much of this was known about. Like, did they know once they fired off these things that this situation was going to come up with these people? Where they said, like, we're going to get all these people to take forbearance, and then their capabilities of buying a house is going to diminish. And then we'll lower interest rates to a point that very few people can actually get a loan for a home, holding back that irrational exuberance that you would see come from lowering interest rates, taking out too much of a loan for, on payments you can barely afford. And once you lose a bit of income, it's all over. So right now you're sitting in a situation where only the most creditworthy people are able to get a loan. People with down payment, people who have saved. They're saving the prices of the housing market. They just cut out the pool of buyers who are able to get to them. Uneducated Economist. You guys let me know.